Hello and welcome back to Building Wealth on the Go, podcast by KLT Wealth Management. Today is June 13th, 2024. We're back with Season 5, Episode 6 of our podcast. I'm your host, Brad Wilson, joined by my colleagues Courtney Beach and Joe Filiameni. We're here mid-year, a couple weeks away from July 1st, Canada Day, marking the halfway mark of 2024 as we look forward to the summer, and then eventually starting to count down the days into 2025. Believe it or not. So with that, we felt it'd be appropriate for us to dive into a little bit of what's happened year to date so far in the markets. Where are we at in the economy? What's the outlook look for the rest of 2024? And get into some tips and tricks as we enter into the summer months here. So I think first off, I'll run some numbers off just so we've got some sort of baselines for where we've hit year to date so far. And then Courtney and Joel, get your thoughts and comments on sort of what's happened so far this year. So if we look at sort of the main benchmark indexes that a lot of people sort of track, and they're headlined in the newspaper, if you still read a newspaper, or online if you're on various websites.
I still read a newspaper.
Yeah, that comment was for you, Joe. The S&P 500 is up 14% year to date. You've got the NASDAQ index up 19% year to date. And then the Vanguard Total World Index is up 10% year to date. But interestingly enough, if you look at the underlying numbers, a little bit more diving into some other trackers, the S&P Equal Weight Index is up about 3.75% year to date. The Russell 2000, a bit more of a broader scope of the markets, is up only 1.8% year to date. And if you look at sort of a total world balanced portfolio, taking in that 60-40 split, factoring in the bond market, it's up only about 5.5% year to date. So when you factor all of that in, there's a lot to kind of decipher in those numbers there. So Joe, what are your sort of thoughts out the gate of where we are year to date so far?
Yeah, it's sort of the same story that we started the beginning of the year. Like the markets are very focused on the technology side and some key stock holdings. That's what's really happening. We don't have a broad base increase in the markets, which is probably telling us something, that the general economic conditions are probably, we're starting to see a little bit of crumbling there, I think, on an economic point of view. We've gotten some of the inflation numbers in, and we're starting to see that trend down. Probably not enough for what the central banks are looking for, but it is heading in the right direction. And that's telling us that probably we are, the economy is a little bit starting to get a little shaky. So maybe we will head into a bit of a recession. Nobody knows in terms of how severe this would be. But it's certainly the same story that we've been talking about all the way along. It's been, those tech stocks have been very, very healthy.
Yeah. And Courtney, what are your sort of thoughts so far this year on where we're at and how the markets have sort of led the charge this year when a lot of people were a little bit on edge to start this year?
Well, I still think people are on edge. People are very hesitant, which is why, in part, the markets aren't broadening. I think everyone was kind of expecting this to be a fairly flat year, or even a negative year. But the fact that it's positive is surprising, but good, for investors. But we'll see how the second half goes, because I don't know, it still feels like everyone's hesitant. Just like you got the Bank of Canada dropping its rate and the Americans holding, I think we're going to see a lot of that in the next few months.
Yeah.
Some economies are doing better than others. Some industries are doing better than others, and we're just gonna have to wait to see how that plays out.
Yeah, I think that's one of the storylines. Like we talked for so many, almost months on end, about when are they going to cut rates? What are the rate forecasts they've been holding for this long? I think the storyline's shifting now to how much of a disparity are we going to see between the U.S. and the Canadian economy, right? Because the Canadian economy is much worse off than the U.S. economy is right now, and the U.S. is the big leader when it comes to the stock market, worldwide companies, multinationals based out of the U.S. or centralized in the U.S. And their economy is just so much bigger, right? So you see their inflation numbers surprisingly down a little bit more than expected, but their central bank said probably just one rate cut this year, and you have a lot of people pushing back that that might not even happen. You might see zero rate cuts, and yet here in Canada we've already had one, and a lot of people think we might see another one next month. So
I don't know about that.
yeah, well, it's like there's about a 50% right now that's about a 50-50 on whether or not they cut again in July. The other people saying if they don't cut July, it'll be September, and it'll be another
Yeah,
20.
but when you think about it, as you said, Brad, it is a bigger economy down there. So if it was like a train on the tracks, it's going to take more
Mm-hmm.
brakes power to slow it down. So it kind of makes sense that they're taking longer to slow their economy
Mm-hmm.
than it is for us to slow ours, because we're very concentrated and banks and resources and a few other things here or there. But
Yeah.
you know, it doesn't take as much to slow our economy as it does theirs.
But
So.
there's an impact there, right? And I think that we've talked about this before, where already we're seeing our Canadian dollar drop and our
Mm-hmm.
commodity
Mhm,
prices drop because we dropped interest rates, the U.S. didn't. So now all
mhm,
of a sudden, U.S. dollars is soaring, and that has an impact in our general economy. It's going to have an impact, especially on our imports. It's going to cost us more to bring in more imports, and Lord knows
mhm,
everything is imported into Canada, right? Because we
Mm-hmm.
don't
mhm.
finish anything here. And but there is a positive aspect on the exports.
Mm-hmm.
For what we do finish and what we do export, those companies are going to benefit from the weaker Canadian dollars. But certainly there is that balancing act that we always talk about.
Yeah.
Well, and the other thing is if we're going into this rate reduction cycle first, are we going to get out of it
Mm-hmm.
first too? So is the other end going to be more positive for Canada? But that might not be for a year or more, so we'll have to wait.
Yeah, I think we kind of bring it back to the markets a little bit. You look at there's a lot of industries in Canada that have seen a little bit more weakness lately. You look at the banking sector's kind of had some struggles this year. It's kind of been a tale of two. You look at the big, I guess, six banks. You can loop in National Bank there as well. They've got a big acquisition that's underway right now as well. But about half of the banks have had pretty good years, and the other half have had pretty bad years this year,
Mhm,
and so it's kind of been a tale of two tapes there. But there's weakness in the Canadian markets for sure, and that disparity we talk about. Looking at certain companies, like it's hard to not talk about Nvidia up 170% year to date, right, as the
mhm,
leading driving force behind market rallies, followed behind by other tech giants, but they're only up in the 20-ish% range. So you've got to see
mhm,
them as they're pulling everyone along and everyone else is along for the ride, just kind of getting by right now in these difficult times.
mhm,
And these bigger companies, seems like they're able to weather these higher rate environments. The tech age is still resilient despite poor economic conditions, and it's causing a big gap. And that's, I think, the big thing is it's causing that big gap right now because there's definitely a lot of companies that are struggling. And where do you find that fine line that you walk of where is the economy, where are the markets heading? And ironically enough, when interest rates get cut, when the Bank of Canada cuts rates, it means that it's a poor economic environment. They need to provide relief. Yet, what happens when you see inflation come down and the Fed in the U.S. saying they're going to cut rates this year? The Bank of Canada cuts rates, the markets soar, right? Like this is a great thing, but we're entering difficult economic times. That's what it signals, right? At the end of the day, so it's an interesting sort of counteractive measure that's being put in place there. Yet the markets are reacting positively.
Yeah, that Nvidia is certainly something for the storybooks at some point in time. They'll probably have a movie out on Nvidia at some point in time, right?
Yeah.
But like you got to think in terms of the management of Nvidia, and they're riding this wave to the very end. Like last week, they did the stock split, and smart move. Why did you do a stock split? Well, now the price of the Nvidia stock has gone down, and those that couldn't buy in before will start buying because it's a lower price point, right?
Mm-hmm.
Like
mhm,
smart move to do that. And that's driving the price up too because it's just riding that wave of, they're constantly in the news, they're constantly on the radio. So they're riding that wave, riding that stock out. My biggest thing is this the next research in motion RIM stock, right? That was just like a darling stock position and was going up and up and up and could do no wrong. I would think that the managers at NVIDIA have to kind of keep an eye on definitely the competition, because there's going to be some copycats out there getting into the market, if they haven't already gotten into the market, to ride part of that wave with them. So makes total sense. Very, very interesting. We definitely have to write a book on this one at some point.
Yeah, the key for them is investing some of that profit into innovation, because that's what messed up RIM is they didn't, reinvent themselves or invest in new things, and so they became the old, slow, everyone has this
Yeah.
now company.
It's almost like Nvidia caught the big tech giants off guard, like your Microsofts and Apples and everything, and they're watching them now match them in market cap and size, and they're probably sitting there thinking, okay, we got to scramble here and move all of our resources to AI, to microchips,
Yeah.
to like we've got to pivot, because we can't let this company come and dominate the market space now, right?
Yeah.
So
And they might have been investing in those areas before, but now they're advertising
yeah.
it. Now they're telling all their investors and the public, "Hey, we're investing this
Yeah,
too."
you
So
see, you
trying
saw
to ride that
Apple come
wave.
out with their whole AI presentation this past week.
Yeah,
Everyone's cell phone's gonna have Chat GPT ready to search something up for you. It's
yeah,
the iPad's getting an overhaul in the iOS and everything, even so much so that it scared Elon Musk to saying he won't let any of the Apple devices into his facilities because it's going to listen to all of his innovation, right? So it's quite fascinating. You've seen these companies now really push the AI kind of aspect of things, and the fact that they are
yeah,
working with OpenAI to add Chat GPT into the Apple iOS is pretty interesting. So you're definitely
yeah.
seeing these companies take notice and publicly talk about it, right?
Well, the other thing is too is it's interesting that I wonder what's going on in the boardrooms at Apple, because why aren't they doing this
Mm-hmm.
themselves? Like, why aren't they creating their own AI? Why are they outsourcing it to another
Mm-hmm.
company? Are they that eager to get on the bandwagon that they're outsourcing it?
Yeah,
I don't know.
it could
Maybe it's
be.
quicker. It's
Yeah, that's
quicker.
it.
I'm wondering if they're just so eager to get on the bandwagon, and that's why they're
Yeah, it's
outsourcing.
speed, right? If they can say, hey, our phones are linked to this wonderful technology and this company, that Chat GPT, that you can't get on an Android device, you can't get
Mhm.
anywhere else on a cell phone, then that's a differentiator for them, right? So
Mhm.
Well,
Yeah.
and just kind of moving along here, like the old saying of sell in May and go away in the
that didn't
markets where
happen.
you'd sell your position. No, that's a wrong thing for this year, because
Yeah.
I think there's
Yeah.
going to be a lots of happening here this summer. We're seeing that now. Lots of sort of action and stuff. So really, really interesting how the summer is going to sort of unfold from a market point of view.
I will say the one sort of note on where we are in the markets, the PE ratio, which is the price to equity ratio, which is often tracked with our valuations getting too much. Is the market a little too frothy? It's now up over 28, which is a level we haven't seen since the later half of 2020 into the beginning half of 2021, which, if you remember, was the market surge. So at that point, valuations went crazy. And what happened after that? Well, we saw the fall of 2022 with the markets down 20 to 30%. So, are we pushing that? Are we getting into an environment where we're going to see some leveling out? Again, it's led by these companies dragging the markets along, and that'll be interesting to watch. But the one thing we haven't touched on yet, it's an election year. So there's so much going on that, in an election year, you don't want to be the one that has the fall of the markets the 3 to 5 months leading up to the election, right? You don't want to be heading into an election. So, as much as people say politics aren't involved in the markets at all, right? Like, there's something to be said about we're in an election year here, right? So,
Mhm.
something, there's some sort of correlation to what's going on, because
Yeah, that will be sort of our, our fall sort of sessions, is sort of focusing on sort of what the election,
yeah,
and how that's going to impact markets. So interesting
Mhm.
times,
yeah,
certainly interesting times.
for sure. So let's move into a little bit of summer themes here. Getting into budgeting for the summer. The summer is an easy time to whip out the wallet. There's patios look nice, the drinks, the food, the activities. So, what are some tips, strategies, things to look out for when it comes to budgeting for the summer there, Courtney?
I think it is just creating that budget and sticking it to it, to be
Yeah.
honest. I mean, for me personally, I have like an idea of how much I'm willing to spend on those extras during the summer, and then I stick to it, because like you said, Brad, it's so easy to whip out the wallet. Okay, I'm going out for supper this evening. I'm going to buy this trinket on my vacation. It's so easy to buy a little here, a little there, and before you know it, you're looking at your bank
Hmm.
statement and you've completely blown your
Yeah.
budget. So I think that's the key, is just kind of have that dollar figure in mind and stick within that.
Yeah, watch the credit card, usage, I think, is really important. If you're traveling,
Mm-hmm.
just be conscious of the fact that, hey, I'm back home. I still have a $400,000 or $500,000 mortgage, and my rate's at 1.9, but matures next year at 5.
Hmm.
So,
Mm-hmm.
enjoy yourself, have a great time, but at the same time, watch what you're spending. I think is
Yeah.
really, really
And,
important, whether you're away or
and
at home.
another Yeah, and another thing is everyone has sales in the summer because they want you to whip out a credit card. So just be very weary. They have the sales for a reason. It's to get you to buy. So, do you really need 2 for 1? Do you really need that thing that, is 60% off?
Yeah.
Just watch and be
I
wary.
think one thing too, which a lot of people overlook, is there's a lot of things you can do for free in the summer, or like very low cost. Like
Mhm.
there's a lot of free parks, beaches, even parks passes and stuff are relatively inexpensive for families, that you can go and explore a lot of area in Canada and get that exposure, do those trips, and it doesn't have to cost you much. You can pack a lunch at home, pack a cooler up, head to the beach, head somewhere, and those are really relatively inexpensive ways to enjoy the summer. And so you just
Mhm.
have to look for them and do a little bit of planning. There's lots available in all sorts of areas, and you can make trips out of it. And so you don't have to go to a resort, or go on a cruise, or go in a hotels or anything like that. There's lots of really cost effective measures. So do your research on that, because that can be a real big cost saver and still allow you to have some fun and do some traveling throughout the summer.
Yeah.
So,
And hopefully, if you have planned the trip, like you've already paid for that trip already. So
mhm.
that's sort of behind you. So you don't have that expense when you get home. It's just going to be sort of the actual expenditures during the trip, and just kind of watching those expenditures. And yeah, looking for the free opportunities would be great.
Mhm.
Quite honestly, sometimes it's just nice sitting out in the backyard. That's what I find,
Yeah.
but one of the things too, and you made a good point there, the patios and stuff. So there's no lack of patios nowadays. I think after COVID, there was an explosion of patios for all the restaurants, and even downtown Toronto was like huge amount of patios and stuff. And I don't know if you've been out to a patio or had a drink recently, guys, but like it's not cheap out there. It's not
Mhm.
cheap. I
Yeah.
guess it says we're $14 for a drink,
Yeah.
and that's So when you start thinking about that, might be better off to hit the liquor store and the beer store and go home and have like a little party with your friends
Yeah.
over in
Mhm.
behind in the yard and spark up a barbecue and stuff. So
Yeah.
might be a way around it, right?
Yeah.
So if you
Exactly.
have the availability.
Yeah. And then one thing which I know a lot of people don't want to think about right now, because school season's almost over, but in about 2 months from now, the back to school shopping will be running rampant. So
Mhm.
lots to think about. People heading to university in the fall, If you are moving a kid into university, book your van or U-Haul now, because if you try to do that in a month or so, they will be sold out, or about $3,000 a day probably, because the demand just runs rampant at the end of August.
Yeah, and the tuition bills are coming out already. We're already seeing clients coming in with their tuition bills, wanting to pull from their RESPs. So it might be a couple months out, but the schools are already got their hands out for their money. So
yeah, they start nice and early. So important to start, as much as you want to enjoy the end to this school year, you got to start looking ahead to the next school year and kind of planning a little bit in advance for some of that, because those expenses will come up. And if you're late to them, a lot of those are demand expenses. So supply and demand, and there's always a lot of demand. And so the earlier you book and you secure stuff, the better time you'll have. And then you don't have to worry about it through the summer. You can enjoy your summer without having to worry about sort of that back to school as much as you don't want to think about that mid-June. But yeah. So that sort of wraps up our main topics for today as we kind of head into the summer. We'll wrap up, Joe, with a financial planning tip of the month.
Well, it says I think you guys stole my thunder with the idea of summer and budgeting and stuff. So, really, the tip of the month for me is and tip of the summer would be hoping everybody enjoys their summer, have a great summer, relax. Use this time, I find, in order to kind of think a little bit about your financial planning. Think about your goals. It's a great time to sort of reset the goals in your life. Again, sitting out in the backyard or chatting with friends and just kind of saying, where do I want to go? And then looking at your current situation and sort of assessing that. So it really is a good time for reflection. So enjoy your summer, do some reflection, and stay safe.
Awesome. Thanks, Joe. We will be back. So we will be off podcasts for the next few months. So our next podcast episode will be September, 2 months out of the U.S. election. So there'll be lots on the roar come that time. We'll have lots to recap from the summer months. So that'll be a really interesting podcast, probably a longer one than normal, because we usually have a lot to talk about post summer. So stay tuned for that one. Thanks everyone for listening, watching, wherever you are taking in this content. You can subscribe and leave a like wherever you are, and check out our other social medias as well. We've got lots of great content across our social media platforms. So thanks as always. Enjoy your summer, and we'll see you in the fall.